Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business, one filing at a time. Today we're looking at Global Technologies Ltd, and it seems like they're cooking up something new, a fresh batch of preferred stock, and well, let's just say they're mixing up their revenue streams. Before we dive in, if you like getting these insights delivered straight to you, hit that subscribe button, and for even more community discussion, make sure to join our Discord. The link is in the description below. So Global Technologies Ltd, or GTEL as they are known by their trading symbol GTEL on the OTC markets, which is essentially a less regulated place to trade stocks, has just released a report detailing some interesting moves. It looks like they're bringing in new investment through what they call a private placement, which means they're selling their shares directly to a select group of investors rather than selling them on the open market. The big news here is tied to their Series P preferred stock. They've entered into agreements, a subscription agreement and a related revenue sharing agreement with some accredited investors. Accredited investors are basically wealthy folks or institutions that the government considers sophisticated enough to understand the risks involved in these kinds of investments. They're looking to raise up to $1 million, actually $750,000, by selling these Series P shares at $1 a piece. Now, here's where it gets really fascinating. It's not just about selling stock. These investors are also getting a cut of the company's future earnings through these revenue sharing agreements. For every dollar they invest, they're entitled to get $2 back, but not just from profits. They're getting a percentage of the revenue from specific parts of the business. Imagine investing in a company and getting paid not just when it makes a profit, but based on every dollar that comes through the door from certain operations. Specifically, they'll get 5% of the net revenues from Prime Care Supply, LLC, and Pulse AI. Net revenues means what's left after certain costs are taken out, and it gets even more interesting. They'll also get 5% of the gross revenues from GTEL Advisory Group, which operates as Global Advisors. Gross revenues are the total sales before any costs are deducted. So you've got investors getting a share of both the net earnings from some ventures and the total earnings from another. This is a way for the company to attract investors by offering them a steady stream of income that's tied to the actual business activity. It also shows the company is confident in the revenue generating capabilities of these specific businesses. To formalize this, the board of directors has approved a certificate of designation. Think of this as the official rule book for this new type of stock. It sets out all the details. They are authorized to issue up to 750,000 shares of this Series Prev to 7 shares of this Series Preferred stock, and each share can be converted into one share of common stock, which is the regular stock most people think of. They're going through 1,000 votes per share, which is a lot. And there's a 6-month lockup period, meaning these investors can't just turn around and sell their shares immediately. An important detail for these preferred shares is their liquidation preference. This basically means that if the company were to ever shut down and sell all its assets, the Series P shareholders would get their money back before the common shareholders get anything. However, they are junior to another type of stock. They have the Series N preferred stock, meaning the Series N holders get paid first if things go south. This certificate of designation will be officially filed with the state of Delaware very soon, by early September. This is a critical step in legally establishing the rights and privileges associated with this new Series Preferred stock. And in other news, the company has also updated its corporate presentation. This isn't a direct financial disclosure, but it's a way for them to communicate their story and strategy to current and future stakeholders. They're furnishing this presentation with the filing, and it's likely to shed more light on their business plans and how they see the company growing. Companies often use these presentations to paint a picture of their future, so it's worth keeping an eye on the kind of narrative they're putting out there. This corporate presentation is being furnished, not filed, which means it's part of the disclosure, but doesn't have the same legal weight as a filed document. However, it's a window into how the company wants to be perceived and what key messages they're trying to convey. Looking at the overall picture, Global Technology seems to be actively seeking new capital and structuring deals in innovative ways to attract investors, particularly by linking their returns to the revenue streams from key business units. This strategy can be a double-edged sword. On one hand, it can provide a consistent return for investors and attract capital when traditional equity financing might be more difficult or expensive. On the other hand, revenue is not the same as profit. A company can have high revenues but low or even negative profits if its costs are too high. So investors need to be very clear about what they are getting. The fact that they are using instruments like preferred stock with revenue sharing attached and listing on the OTC markets suggests they might be a smaller company or one that's in a growth phase and potentially finding it harder to access traditional, more stringent forms of financing. The heavy voting rights attached to this new preferred stock, 10,000 votes per share, are also significant. This could potentially shift voting power within the company depending on how many of these preferred shares are ultimately issued and converted. Now, what does this all mean for Global Technologies? They're clearly trying to fund their operations and growth by bringing in new money through a structured deal. The revenue sharing aspect is designed to make the investment appealing, giving investors a direct link to the company's ongoing business performance. The key for them and for potential investors will be managing these revenue streams effectively and ensuring that the underlying businesses generate enough revenue to satisfy the terms of the agreements while also leaving enough for the company to operate and grow. It's worth remembering that the company is incorporated in Delaware, which is a common state for businesses due to its favorable corporate laws. However, the real test will be the financial performance of Prime Care Supply, Pulsay, and Glowell Advisors. If these businesses thrive, the new investors will see good returns and the company will have secured valuable funding. If they falter, the revenue sharing agreements could put a significant strain on the company's cash flow. Do your homework before investing in any company, especially one that uses less common financing structures. Understand the terms, the risks, and the actual business fundamentals. For Global Technologies, the next period will be crucial to see how these new Series P shares are received and how the revenue-generating segments perform under these new arrangements. Alright, that's our breakdown of Global Technologies Ltd's latest filing. What's your take on these revenue sharing deals and the company's strategy? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for more discussions like this. Thanks for watching. See you next time.